Bollinger Bands and Bear Markets. When a market drops steadily over time, there will be continuing interest in its behavior as traders watch to see if it will demonstrate a recovery in time. Signs of recovery may be no more than a sucker's rally, and early, rash judgments can cost you horribly. There is really no upper limit to how long the bear market can persist, but there are identifying markers which often point to a market stabilizing and presenting an opportunity for the attentive investor. By reading the Bollinger Bands you can determine the optimum time to enter the market. It is easy to identify a bear market using Bollinger Bands. When watching the behavior of upper and lower bands over the course of the market, the bear market will show the lower band width expanding while the upper width contracts. The opposite is true of a bull market. When the price of a share then reaches the point of the lower band, it can be a very good time to invest, as the likelihood of a retracement increases. In this way, an understanding of the behavior of Bollinger Bands helps to identify market bottoms and tops. Deviation from this typical behavior can be taken as a sign that the share is in free fall. If a stock continues to close beyond the band, the shares are likely to continue trading in that direction, and it can be considered a good time to get out, or in the case of shares that you are merely watching, to not invest in the first place. If, after closing outside the band, the stock then reverses its trend, it will often retreat to the opposite band before stabilizing. This is a good way of recognizing an opportunity to make a quick, aggressive trades before closing your position early. The ability to read Bollinger Bands correctly allows an investor to spot opportunities in a bear market. While the lessons learned from past behavior do not always hold 100% true, they are a clear marker of what it is reasonable to expect. If you study the data day after day, it becomes easier to notice patterns emerging and predict the immediate future behavior of a stock, which can lead to you making a quick profit or help you avoid making a very costly mistake. It takes practice, and there is every chance of getting stung if you are too reckless, but the ability to read grows better with practice. Bollinger Bands are the premier indicator for measuring volatility and reversion to the mean. It is widely agreed that more than price alone, volatility has a great tendency to revert to the mean. A good understanding of Bollinger Bands will allow you to identify key entry and exits for more profitable trades.